During an M&A sale or divestment process, the investment banker would need to share a detailed letter outlining the process of how an interested buyer may send in their initial indication of interest. This is known as the initial bid letter. The initial bid procedures letter is typically sent out to prospective buyers following distribution of the confidential information memorandum, a detailed marketing description written on the selling target. The bid letter will state the date and time by which interested buyers must submit their written and non-binding preliminary indications of interest, also known as first-round bids. It also defines the exact information that should be included in the bid, such as indicative purchase price, typically presented as a range, and quoted in enterprise value, which is equity value plus debt minus cash. The form of consideration, which is whether the transaction will be financed by cash, stock, or both cash and stock. Key assumptions to arrive at the stated purchase price. Basically, what is the valuation method used? Is it DCF? Is comps, or is it precedent transactions? And what valuation multiples were ascribed? Is it EV to EBITDA or EV to revenue? Information on financing sources, such as will the company be using existing cash balances or will the company be approaching relationship banks for debt financing? Structural and other considerations. Treatment of management and employees, which is what is the buyer's plan in relation to the management team? Would they want to retain the management team or fully replace them with personally hand-picked candidates? Timing for completing a deal, including details such as diligence that must be performed and required approvals. Key conditions to signing and closing. And not to forget, buyer's key contact information. After the prospective buyers received the initial bid letter, they will use the given weeks to review the information memorandum, study the seller and its sector, and conduct preliminary financial analysis prior to submitting their initial non-binding bids. Depending on their level of interest, prospective buyers may also engage 3 different parties. Buyers' investment banking advisors play a critical role in helping their client regardless if the client is a strategic buyer or a financial sponsor. The buy-side advisor will help in assessing the seller from a valuation perspective and determine a competitive initial bid price to include in the bid letter. Financing sources help assess both the buyer's and seller's ability to support a given capital structure and provide their clients with data points on amounts, terms, and availability of financing. This financing data is used to help frame the valuation analysis performed by the buyer. Consultants provide perspective on key business and market opportunities, as well as potential risks and areas of operational improvement for the seller. All the advisors will help the potential buyer in forming an opinion on whether they would like to proceed with the submission of a bid. And, if they do submit a bid, the advisors will advise on what should be included in a bid in order to get accepted.